Hey, all, Stephanie McCullough here with a couple quick thoughts on the investment markets. We know, I'm sure you've heard some headlines that we're not in the most rosy of times in the markets, but I wanted to give you a couple points of perspective from some of the people that I follow who write about this stuff really well. So, one guy named Tim Maurer talks about how we're now in the emotional phase of the markets, where investors are driven by emotion as opposed to rationality. And he says this often leads to indiscriminate selling of virtually every asset. So it's kind of driven more by worry and fear than by actually, analyzing each company and seeing what it's worth. To confirm that, another well-respected gentleman, Bob Veeries, talks about how stock prices have never been a very good precise indicator of what a company is actually worth in a given moment. And just to remind you, the overall performance of the stock market is actually a conglomeration of the performance and the ongoing price changes at every single company, the stock price that's trading at that moment, right? And the stock price is supposed to be a representation of what the company overall is worth. But he's saying in any given moment, it's not really a very good indicator. However, what it's indicating is what people are willing to pay to buy those shares. And right now, he's pointing out there are more sellers than buyers. So we're in what's called a bear market, right? Which is when the market goes down quite a bit. And he says the reasons for bear markets are seldom rational, which is why they end, right? And markets, at least in the past to date, have always gone back to and surpassed their previous highs. So I love this analogy he uses. He says, what's happening right now is not unlike what happens when one of our children is diagnosed with an illness, and the remedy is a daily dose of some awful tasting medicine. The illness in this case is inflation, which he says absolutely has to be cured if we are to experience a healthy economic life. And then he talks about kind of the impacts of inflation, right? He says few things are worse than having the money you've saved up deteriorate in value at double-digit rates, which is what's been happening this year. So remember, inflation means the cost of living is going up. So if I compare, for example, a dollar that I owned 2 years ago and what it could purchase versus what a dollar could purchase me today, I could buy less with the dollar, right? So that's what we mean when we talk about, right, as prices are going up, the value of an individual dollar is actually, when you think about it in terms of what it can buy for you, it's going down. So that's the effect of inflation. A small amount of inflation is, of course, healthy, but when it gets high for a long period of time, that's the result. So he's saying the cure, which any child will tell you is more unpleasant than the illness itself, is the US Federal Reserve raising interest rates. And then he goes on to explain how that tries to reduce inflation. And I'm going to tell you that economics was the only class I fell asleep in undergrad, even though I went on to get a master's in international economics. And I'm worried I'll put you to sleep if I go into the details of that. But basically, it's about reducing cash and reducing the numbers of buyers versus sellers, which should bring prices down if there's more sellers and fewer buyers, right? It's always about that balance of supply and demand. So it's happening in the stock market now, starting to see signs that it's happening a little bit in the housing market. Then he says often people are worried that this is going to lead us to a recession. And there's a lot of headlines and kind of fear mongering around that. It's possible that we might get there. But again, I'm quoting Bob Veeries. He says, but at this point, a recession might not be all bad for the economy. Recessions act like a cleansing mechanism, exposing and eliminating waste and inefficiency, and ultimately creating a healthier economy when we come out the other end. So to sum up, he says, so right now, we're taking our medicine, and boy, does it taste awful. We are also collectively suffering an economic illness. Anybody who has come down with a bug and taken medicine to cure it knows that the former unpleasantness, meaning the bug, doesn't last forever. And therefore, neither does the latter, meaning the ucky tasting medicine. And so to sum up, go back to Tim Maurer. He says, none of us likes to endure downward market cycles, but experienced investors know that the stomach churning is simply the price to pay for higher long-term expected returns, which is why we're always harping with you about your short-term money being somewhere safe, earning not much money, versus your long-term money, which is exposed to market ups and downs. So that's my little perspective point for you today. I hope you found it helpful. Take care.